Hey, what's happening, everybody? Tim from Alpha Pool Trading coming at you with let's see, stocks to watch, kinda. Um, More importantly, state of the markets, which aren't looking all that healthy. Now, we have been talking about the fact that, I felt as though we probably still had a uh, downside in the markets, especially in the large cap and the mega cap type names. And it does look as though we are seeing that come to fruition. So, rough week last week for the markets, and I think that it's going to get probably more rough in the next couple of weeks. We're coming up to some interesting technical levels in a few sectors. We'll go over that in a minute. We've got earnings, which are, earnings season, which is wrapping up. Um, FedEx, I think they pre-announced, and it's going to be a pretty ugly quarter. They're going to be reporting Thursday, and there are just lots of things going on around the globe with this inflation that are really wearing on the markets, and I think that's going to continue. The Fed, we've talked about this before, is raising interest rates rather aggressively, and we're going to be seeing. I think when do we get the next increase? But I've stated that I feel as though um, you know he could be getting overly aggressive. I'm just going to give you an example that homes in Las Vegas a few months ago we had 1,600 homes up for sale, and in the latest report that I saw, we have 8,000 homes up for sale. And, with the rising interest rates, I don't see that getting better. The next move that I think we'll see is home prices start coming down. So there are some interesting dynamics. The Fed wants to slow the economy down, slow the inflation down. And, we're still going to have high energy prices. A lot of that is related to Russia and basically our policies. Uh, just a lot of interesting dynamics out there. But what I will say is this, and I know it's difficult to listen to, but there are companies out there that are tremendous values right now, and that doesn't mean that they can't get more tremendously valuable, um, or the opportunities can't get greater. Fear is a very strong motivator, probably the biggest motivator. And when people get scared, they have a tendency to do things that are irrational. And they do things like sell everything in an attempt to save something. And really, what they should be doing is looking at the companies that they like, that they are uh, have good, deep knowledge of, that they can reach out to and find out if anything has significantly changed that would warrant some real concern. And if those things aren't happening, the company is still performing or actually performing above expectations, then at some point you have to think that this won't last forever, and things are going to get oversold, overdone to the downside, and that represents an opportunity for you to build your position and bring down your dollar cost average, or maybe start a new position. Um, this is, when you start to look at, and not yet to get aggressive, right? So I do think we're going to have that capitulation moment in the markets. I don't think that we have had it yet. We've gotten close a couple of times, and I do think that's probably going to happen in the next couple of months. Um, And then after that, I think we're going to get some kind of a rally. How sustainable will that rally be? Will the bear market be over? I can't tell you that. I can tell you that in a bear market, the bounces that you have are vicious. They catch the shorts off guard, right? And that's why they can be so dramatic, right? You can have some huge moves in a very short period of time. And when that the bear market is actually over, then it's a chase game, right? Because you're waiting for that pullback that never comes or doesn't come for quite some time. So historically, if you look at stocks, what do they do over time? They go up. That's just the facts, right? Um, the markets, if you look at the charts of the markets over time, historically, we always wind up going from the lower left to the upper right. I think it'll be the same here, unless it's the end of the world. And if it's the end of the world, well, then does it really matter? Because it's the end of the world, right? Um, so things can get tough. They can get tougher, but this is when you do your due diligence. This is when you do your homework and you try to understand to the best of your ability why you are invested in a company or why it presents a great opportunity. So, with that being said, we do have a couple of interesting earnings reports. Nothing that AutoZone is always a good one. Typically, the auto parts guys do well in a recessionary environment, right? Because people, instead of buying new cars, are doing what? They are buying parts for their older car, right? Aurora Cannabis, that could be interesting. We've got General Mills, a nice consumer staples play. You got Lennar and KB Homes. We've got Costco. Who else? Oh, FedEx, but they already pre-announced, which, in case you didn't see, was not a pretty sight on Friday. Take a look at that real quick. And what does that mean, right? I would imagine the transportation sector probably took a pretty good hit too, but let's take a look. All right, so FedEx, eh, huge, huge drop, right? So we were at what, 210, and we got a big gap down to what, 160, or is that 150? 160. But it got down actually to about 155 bucks, right? So do we think that, or do I think that, excuse me, do I think that the pain is over at FedEx? Probably not. I mean, I think it's a pretty healthy drop. And if you look at it, it's been in a downward move since the beginning of 2021, right? So we've been making a series of lower highs and lower lows since 2021, and now we got a big gap down. Where can it go? Can it go back down here to these levels? 90 bucks, possibly. Anything's possible, right? Um, things that look cheap can get cheaper, and things that look expensive can get more expensive, depending on what's happening in the market. So, FedEx, definitely a painful day, and I don't think that the pain is over. I think there is what is this? This level right here where you can see some congestion. You had a reverse head and shoulders pattern over here. You can see there's some congestion. Let's actually move this to a weekly time frame. So there's some potential support right about where this thing pulled to, right? And if that cracks, where is our next level of potential support? I think you have some potential support right around 125 or so, and then there's probably going to be some right around 100, right? Round numbers, right? Staying above 100 would be, I think, something that somebody would want to come out and possibly defend. Um, and you go back to, what is this, 2013, 2012, and 11, had difficulties getting through that 100 mark, right? So that would be an interesting spot where you could probably see some decent support. Uh, but overall, not a very good uh, chart, good looking chart with Federal Express, right? So we'll see what happens. Now, let's take a look at some sectors, see what we've got going on. Of course, not exactly a real pretty picture here, right? So bots, which is the semiconductors, robotics, artificial intelligence, several different types of companies, all kind of you know, focusing around the whole robotics type industries. You are looking at, looks like we're going to probably take out this area of support right there. We'll see what happens next week, but not a very comforting chart. And if you're a bear, probably something that you are eyeing with the intent to play short. IBB has, it came right up into this area of price resistance. It found some resistance and it's pulled back. You got above the 200-day for a brief period. And now what are we doing? We're testing staying above the 50-day. Remember, we've got the death cross, right? 50 below the 200 within the IBB. Now we're testing this trend line right here, this little trend line. We wind up cracking below that. Where do we go? There is a strong possibility we come down and we test this area of price support, which was a previous low. So if we go down and test that and we crack it, odds are we're going lower. Same thing is happening with the IWM. And we've talked about the fact that those two are correlated because of the fact that there are a lot of small cap um, biotech companies, right? So I doubt you're going to see the IWM go on a rip roar if the IBB cracks and stays below the 50-day and goes down and tests that area of support right over here. I think you're going to see the IWM probably follow along the same lines as the IBB. Now, the microcap names, for a while now, we have been kind of just basing, kind of going sideways. Seems like the bulk of the pain has stopped for the most part. These things are trying to base, and we could continue to base for another 6 months, 8 months, a year. I don't know. We'll have to see how it plays out. But um, if we wind up coming back and testing this low and cracking below this low right here where there's some support, that's going to put more pressure on small cap names, right? IYT transportation, like we said, after FedEx's news, getting a bit of a pullback there in the IYT, right? That also had come up to the 200-day moving average and was unable to get through it. And now we're looking at potentially going back down and testing these lows, this area of price support. If we take those lows out, that's going to be problematic. QQQs, very similar type pattern to all of these stocks. All of these charts had an incredible short rally, powerful rally, but now we're coming back down, right? So the bait them and get them in, thinking that the bear market is over. It's kind of looking that way, right? we go back down and we test new lows, that's going to be problematic. There's going to be some fear that enters the marketplace, and you started to see that this week, and all the news is appears to be negative. We'll see what happens next week, but to me, I think we have lower to go. I think we need to hit that capitulation moment where the T2108 and the T2107 get into single digits. And we'll talk about that in a little bit. But very likely that could happen in the next, I say, 3 to 4 weeks, right? I think there's a very strong possibility that that happens. SMH coming down to an area with its recent low, right? This is the area to watch right here. Wind up breaking below that. That's going to be problematic for the SMH, for the semiconductors. S&P 500 testing this little trend line here and back below the 50-day moving average, which is problematic. XLB, home builders. Now we're going to have Lennar and KB, which will be reporting. XLB is actually building materials, but it's kind of skewed because they've got sorry, they've got Lowe's and I think Home Depot in there as well. So that might be a little skewed, but that also testing this little trend line below the 50-day moving average. XLE Energy is probably one of the strongest looking sectors out there right now, simply because of this thing that's going on with Russia, right? XLF Financials, very similar pattern there. We came up, we tested. We didn't really come up to the underside of the 200-day, but we did come up into this area of price resistance. Found that resistance. We're pulling back, and now we're back below the 50-day moving average. We're going to come back down and test this area of potential support. It's looking that way. Same thing with the industrials. XLI goes below the 50-day moving average, and could we come back and test this area down here? Absolutely. That is a possibility, especially if the news flow and the chatter continues to get worse. XLK, that's just another tech ETF. That looks similar to the QQQs. XLP, which is consumer staples. Now, this one is a little bit interesting to me because this is considered to be a safety trade. General Mills reporting. It'll be interesting to see what happens with consumer staples coming up next week. A lot of weakness out there is what I'm seeing, and I think we're going to continue to see that because we have not hit that maximum fear level yet. Utilities is another one that I think is kind of interesting because that also is considered a safety play, and that is pulling back, and we're testing the 50-day moving average there as well, which is above the 200-day, by the way. So utilities is somewhat interesting to me. Let's see, XLV, healthcare. All right, came up. We tried to get back, what is that, above the 50-day moving average and unable to hold it. Now we're testing this little trend line right here. That doesn't hold. Where do we go? We potentially come back and we test this area here and see if that holds, which was the previous low. XLY, consumer, what's that? That is discretionary. Consumer discretionary. So restaurants, stuff like that. This one is actually holding up. Well, no, it's not. I mean, look, it's above. It looks like it's above the 50-day moving average. However, it is testing this little trend line. If this fails, odds are going to come back down and maybe test this area here. And then XOP, that's the other energy play, right? Still one of the stronger looking sectors out there. XRT, retail, not looking all that great. Came up to the 200-day moving average, now back below the 50-day. And the same thing for telecom, right? So not a lot of pretty charts out there in terms of the sectors. I think we see more pain ahead in the next 2-3 weeks, and at some point, if that pain stays consistent, you're going to see that capitulation. You're going to see that fear. So let's talk about that for a second here. For those of you that don't know what I'm talking about with the T2107 and the T2108, those are indicators that are pretty damn accurate in terms of when we could be looking at some kind of a significant bounce or rally. And that's when things get to an extreme. When we get into the single digits, you can see through back in 2009, back in 2016, back in 2019 and 2020, we got into single digits, and that is when we saw a really hard, rip your face off type rally when we got to those extremes. Things are getting overdone. Good companies are getting taken out to the woodshed just because of the markets, not because of anything the companies are doing wrong. It's just the market. So keep that in mind. T2107 is the amount of stocks that are above the 200-day price moving average, right? So we're getting close to, let's see, where are we at? 22, right? Below 20, 20 and below. That's where things are starting to get overdone. When you get to single digits, that's when things are just getting ridiculously, stupidly cheap. So we've got a long ways to go before we get to single digits. We did get down to, what was it, 13 or recently? Yeah, it looks like about 1350 or so. And that was back in January, July timeframe. And let me just see back to. Actually, we got down to, well, was it 1250, right? Um, and then the T2108, which is the amount of stocks that are below their 40-day. And let's see, we're just about, we got 20, 23 or so on the T2107, right? And again, anything under 20, right? Things are starting to get overdone to the downside. And if you look at the weekly on that, the same thing, right? We can go back and see where we get these extremes into the single digits. That's where we get those huge rallies. And those are single digits. That's the sign that capitulation has come in, right? People are reacting on fear and emotion as opposed to really taking a look at what they have. Because it's at these levels, this is when you want to get aggressive, right? You want to, with the companies that you like, if they are getting taken out to the woodshed and you know that nothing has fundamentally changed, or the story's even gotten better, these are the opportunities to really get aggressive. So let's see. That's the markets. That's the sectors. Look, I do have stocks that I like, right? But if the markets remain weak, that could be an indication that things are going to get cheaper, no matter what the company. 90% of the stocks are going to follow what the market does. Now, there are some stocks. I just put out an interview I did last week with, well, week before last, with SPCB Supercom. I think it's a fantastic story. I think the opportunity is good. I look at it from a risk reward standpoint, and they just recently announced getting a $33 million contract. There is somewhere roughly around 200 million that will be awarded within the next probably month to 3 months. I think SPCB has a real shot at capturing the majority of that 200 million, primarily because they have a product that nobody else can compete with. They have a better technology, they have a better system, and they have the passion within the company to, and it's really about doing more than it's about trying to fix a broken system. And I would recommend that you watch the interview and hear what the CEO has to say, see his passion, and what's your risk reward on this, right? If this thing pulls back to, let's say, 30 cents, there's a pretty big area of support there. Now, it did recently just hit like 26 cents, right? Which actually is an area of support going back to, what is that, 2020, right? Going back to 2020. Let me see what this chart looks like on a weekly time frame. And there is some support. It looks like going back into 2010. I mean, look at this. This is where the stock is sitting. Now, if it cracks below 25 cents, that's problematic, right? Because now you have no indication of where there may be support. But I think if you take a look at the video and you see what they've got going on, I think this is ridiculously cheap. And I think if they hit land a few more of those big contracts, you're going to see a pretty nice pop in the stock SPCB. SKYX remains one of my favorites right now, and that is because I think that the story is misunderstood. And if this winds up going down and testing $3 or cracking below $3, I would be looking to add to that position. I think that a lot of good things are happening at this company, and I think that not a lot of people understand the magnitude of what lies ahead for them. Let's see. Funware. I'm going to be interviewing Funware hopefully this week. Maybe Monday. That will be for the members for a week. They get exclusivity to that, and then I'll push it out to social. But Funware is one that had a beautiful move earlier, or was it earlier this year? Not last. It was last. Towards the end of last year. Beautiful move. Locked the profits. Great gain, and still have shares that I bought in like the 89-cent range. And actually, I kind of wanted to add back to those shares. I kind of missed my opportunity. I wanted to get it as close to $1 as possible, but I still think this thing is cheap. But cheap can get cheaper, right? So we are at an area of potential resistance. I wouldn't necessarily want to go chasing it here, but I might. I think these are two. This is an interesting volume bar on Friday, which was a weekday in the markets, showing a bit of strength here. We are coming up to the 50 EMA, where it did have a little bit of difficulty, and there is some price resistance there. And what is that, at about $2, right? Probably about $1.80, $2. So Funware is another one that I do have on my radar for a potential ad. And then, of course, there's MAPPF for those of you that are not afraid to play in the OTC markets. MAPPF has some incredible things going on there. The volume is starting to pick up, as you can see here. Uh, if it were to go back down and test the 10-cent area, I think that is a really a fantastic spot to either get involved in the stock if you don't have any shares, or if you are in it from and have a higher price point of entry. I think that would be a great place to bring down your dollar cost average. I think the news flow there is also going to start to pick up. Um, but all this, hinges upon what happens with the market. How bad does there is there a recession that comes, and how bad will that recession be? Um, if we get a really terrible recession, I think this would be one of the first times in history where it was, basically advertised that it was going to happen way before it actually does happen. And when you have that kind of, remember that when everybody gets on the same side of the boat, that is when the market has a tendency to do the opposite of what you expect. So, I'm not suggesting to anyone that you want to go all in on any of these names. I am suggesting that these companies are doing very good things. They're growing their companies in very tough environments. And I think you want to pay attention to that, right? I think you want to understand the stories, understand the leadership's vision, their strategy, and how they plan to execute, get to the vision. VMAR is another one that right? So electric motors, um, just set the world record for electric boats over 100 miles an hour, 109 miles an hour. It's a fantastic story. I think that eventually that in my view, I think maybe these guys wind up getting acquired by somebody, right? Hopefully they don't sell too soon, but interesting look here on VMAR, right? It is stair stepping higher. Where would I look at some, real potential support? Somewhere around $5.50 would be an interesting spot to get involved. Maybe dip the toe in VMAR. Could it crack and go, down to here 479, 450, somewhere in that area? That's possible, right? So I'm not suggesting going all in. If we do get the capitulation in the market, this thing may go back all the way down to 350, right? And retest that area there. And that would be an area that I would probably like to be, if it did go down there, I'd like to be aggressive, right? Let's see. What else we got? PCB. Let's see. I'm just going to blast through some names real quick here. See what their charts look like. Verb, I still own shares. I've actually done well in Verb. Not super crazy about the execution and buy uh, Verb and the CEO, and I think he oversold the company and overpromised and underdelivered, and the stock got crushed because of that. And you know, right now it's what's your risk reward? It's at 49 cents. I love this thing market that they are opening up. I think there is some real potential there if they can execute, right? This is one that I think if it went back down and tested this recent low of 30 cents, that to me is like that would be an area where I probably would say, what the hell? right? What have I got to lose? Um, and pick up some shares. Let's see what else. Verb, Relic Health, another one that I think they might be reporting actually. Maybe the Relic Health is another story that I like. Um, this is a penny stock as well. So for those that are not comfortable there, sorry, but I got to get a new set of glasses. Okay, Relic Health. RQHTF. It's actually been kind of consolidating and holding on to this little area here of potential support. I think this is another one that's really kind of stupid cheap, but we'll see what happens. I'm going to try and interview the CEO there, do a follow up interview. I just spoke with WYY on Friday. Going to do a follow up interview with them. This thing is another one that I think is stupid cheap, but stupid cheap can get stupid cheaper. I would have never thought WYY, with everything that they have accomplished, would be at these levels, but it is what it is. The question is, are they going out of business? I don't believe that is the case. I think at some point we're going to start seeing some mergers and acquisitions. I think we're going to see companies getting scooped up. Uh, and when we do start to see that, when you start to see the mergers and acquisitions, I think that's going to be an indication that we're probably real close to having the bottom put in. Let's see, WIY is another one. Let's see, who was the other one? Oh, Charles and Covard, which just had a good quarter, but Charles and Covard is a diamond jeweler, right? EHTR, ugly chart. Oh no, CTHR. That's an ugly chart too, though. Um, CTH. Hovering right above a buck, right? I mean, it was in a beautiful uptrend here. Ridiculously, stupidly cheap for what the CEO has accomplished that has come in on this company and, really changed the face of the company, changed the, the execution, and, the stock clearly not being rewarded. And I'll tell you, talking to these CEOs, when you speak with them and you hear with the stories that they tell you and the struggles that they've gotten through with COVID, right? And the market doesn't care. The market just does not care. And that is because of where the sentiment is. But is this the end of the world? I have to ask myself that question. Is this the end of the world? I don't think it is. I really don't. I do think we're going to pull out of things. And I do think we will at some point have the market recognize that some of these things have gotten really overdone to the downside. And I think you're going to get some really significant boosts higher at some point. Uh, let's see what else. CTHR. There was one I was just thinking about right now. Oh, you know what? Pet Vivo, PETV. Now this one has been kind of bucking the trend. Oops, PETV. Now you see a stock like this that is demonstrating strength in a very weak market. That is, this thing's going to stand out like a sore thumb, right? It's going to stand out like a sore thumb because it's one of the few that is actually going against the market grain. This managed to close above a big resistance area of what is that, 275, 280. If this thing can get above $3 and stay there above $3, that could be really interesting. So you just had a 50 EMA cross over the 200-day moving average, which that EMA, I think it's the simple moving average crossing over the 200-day. That is the golden cross. So very interesting. I love the story. I love the product, and the chart is actually looking pretty compelling as well. All right, Pet Vivo. What else? I just had another one that came to mind, but I could do this all day. Um, all I can say to you is that do not panic. You know, try to use this time to identify those things, those companies that you really feel strongly about, and do your due diligence and make sure that nothing has fundamentally changed that would give you pause. And if management is sounding good and everything is on track or ahead of track, this is an opportunity for you to add to a position at bargain prices. And I know everyone will, a lot of people will tell you never add to a losing position. That's a bunch of bullshit. It's all dependent upon your time frame. If this is an investment, if you believe in the leadership, you believe in the company, you believe in the product, why wouldn't you buy it when it's on sale, right? You buy everything else on sale. Why wouldn't you buy a stock when it's on sale? And just hold it until things turn around, right? A lot of these names, there is not much more lower to go. They're going out of, literally they would have to file bankruptcy in order for these things to go lower. I don't see that happening with a lot of these companies. I think they've been punished unfairly. So, Wall Street is not very good at telling the story of smaller companies because guess what? The big funds, they're not going to be able to get involved in some of these small companies. They can't. They're too big. So they're not telling these stories, right? This is where your edge is. So take a, before you don't panic. Take a look at what you've got, understand the stories, and use this as an opportunity to build your position. Okay. All right, that's it. If you got any questions, hit me up at tim@alphawolftrading.com. Happy to help anytime. Sign up for our YouTube channel right above my head, right? That would be cool. Check out some of the CEO interviews. These are good companies that I interview. I don't interview any companies that I don't think eventually are going to make their shareholders and investors money. Plain and simple. It's not a paid for promotion. I don't get paid to do the interviews. I do them because I want to help the company get their story out. It's very difficult for a company to get their story out to investors because Wall Street is a broken machine. It's a broken system, right? There are a lot of good companies out there that nobody knows about. Good products, good services that nobody knows about because nobody covers them. And they don't cover them because they don't do any financing deals with these firms. That's the only way they can get coverage is to do a financing deal. Either that or they have to go out and pay somebody to do a paid for promotion for them. And I don't know, that just seems counterintuitive to me. It seems like, why would I believe a company or someone that's being paid to represent or talk about a stock, why would I think that they really believe that is a good story or that is a good investment opportunity? Because essentially they've been paid to cover the company. So that the whole system is so screwed up. And that's why I do what I do. I try to uncover or help companies get their name out that are doing things that are, significant in many ways. And those are great opportunities, man. If you've got the patience, and you understand the vision, you understand the story, you understand leadership, those are awesome opportunities in the long run for the patient, right? For the ones that understand what's going on, have some vision themselves, and have the patience to wait through and get rewarded. So, and I'm not talking about a 50% return. I'm talking about 10 baggers, right? 20 baggers, 100 baggers. That's what I'm talking about. Those are the kinds of stocks and trades that can change your life. All right, that's it. Enough out of me. I will probably not do another free state of the markets next week. I'm going to stick to the Alpha Wolf Trading crew, and but I'll be back and do another one of these again sometime in the near future. All right, be safe out there, stay healthy, and have fun. Right. All right. We'll see you soon.